Hello, everyone. This is the Free American Press with your host, AlexanderHorat. Before we begin, if you could please subscribe and leave a like on the video, that would be greatly appreciated. Today, we're having Steve Barton on the show. He's the host of In It to Win It, and he shares how he picks mining stocks, running through his initial screening process for companies, as well as questions he asks for CEOs. He also explains how he decides when to buy and when to sell. Hello, Steve. We're really happy to have you on the show.
Thank you for having me, Alex. I enjoyed discussions like this.
Oh, that's great, and I hope we're going to have a really great discussion today. So, which asset classes do you consider undervalued right now, and which do you believe are currently overpriced?
Okay, I would say I do a lot with charts, so I'm going to go ahead and share my screen here with the charts. And as far as underpriced, I would say right now, oil is looking pretty underpriced. I think that oil is pretty cheap. I think that it's going to get, I think it's more likely to get more expensive here in the next 3 to 5 years. As far as overpriced, I think we have probably tech stocks are pretty overpriced. I can pull up here's Nvidia, and I call it my kindergarten method. I like to buy on this end of the chart and sell on this end of the chart.
Yeah.
And I think, if you've been in tech stocks, you've had an amazing run and it's just been awesome, but I think it's time to take some money off the table and put it into something that's closer to this end of the chart, which a lot of oil and oil stocks are.
Yeah, it definitely seems like a really good chart to have. So, where are we right now in the bubble cycle?
Well, that's a good question. I think that generally speaking, with the thing with bubbles is, once you recognize one, it could be 5 years before the thing finally bursts. I remember in the dot-com bubble, people talking about it being a bubble in 1996, and it didn't finally burst until 4 years later in 2000. So it can be a little dangerous to, just say that we're in a bubble and you should get out because you may miss that last blow off top. That being said, I think that I don't know when the AI bubble is going to end. I don't know when the tech stock bubble is going to end, but I mean we could look at some like PE ratios, price to earnings or something, and you can see that some of these tech stocks companies are showing price to earnings ratios of 100. Sometimes, I mean, it was towards the peak, some of them were up at like 400 to 1, which is insane. And
Yeah.
then you go and look at some of these oil stocks and their price to earnings ratios will be, 8, 15, way down there. And it's kind of like the bubble doesn't really end. And, it's not valuations, it's not numbers that I'm throwing out. It's not because it's up at the top of the chart. It's because liquidity dries up. So people run out of money, people start to lose their job, and then they just stop dollar cost averaging, blindly putting into their 401k, and that's kind of when the money dries up, and that's when the bubble bursts. So how close are we to that? I don't know. I certainly wouldn't short it. I wouldn't do that, but I wouldn't put money into it either. And if you have some in there, I'd pay yourself and take some off the top.
Yeah, it definitely makes sense. So, considering how scarce platinum and palladium are in the ground, what drives their valuations to remain so much lower than gold's?
Okay, so you mean like price wise, as far as like what makes them cheaper than? Okay, so I can pull up the platinum and palladium chart right here.
Awesome.
Okay, so here's platinum. Let me zoom out here long term, and this one's kind of cool. I'm going to get rid of these two bottom charts because that's probably not going to help anyone here. And basically, what we're looking at here, this is just the price action of platinum. This white line going down is showing from the great financial crisis all the way down to like a few months ago, was basically showing that we were in a downtrend in platinum. Okay, we finally broke out of that and we've revalued here, so this is pretty cool. We're finally in a bull market here for platinum, and kind of similar with palladium. Okay, so just a downtrend for a long time, and we broke out of it, and now I've got some setups here that I think could be pretty cool for palladium. Now, as far as what you were talking about, as far as their relation to, let's just take gold for example. So what we'll do is we'll take platinum and we'll divide it by gold, and hit enter. And then what we got here, and what this shows, is this shows relative valuation. So I think this is what you were kind of, insinuating at, is if you take an ounce of platinum and you divide it by an ounce of gold, this is a ratio chart, right? Yeah. So basically the lower end of the chart here, this means that platinum is cheap compared to gold. This end of the chart means that platinum is expensive to gold, right? So right now, you could trade one gold coin and get almost 3 platinum coins, right? Whereas up here, you could trade one gold coin and you might get not even half an ounce of platinum. Okay, so normally, the normal ratio, I would argue, just looking back here, this is going back to the mid 80s, right? So over the last 40 years or so, the average price is probably around here somewhere. Like, it would take 1.25 ounces of gold to get yourself 1 ounce of platinum, right? Certainly not the other way around, way down here. So this is basically my plan for platinum. So I'm invested in platinum. And this is my thesis here, right? Is if platinum gets to parity with gold, then I'm going to trade 50% of my platinum and trade it in for gold. Because I look at it like gold is real money, right? We're all libertarians here. Gold is real money. Platinum, I was corrected by one of my subscribers that I guess platinum has been used as money, but it was like in a very short period of time in Russia in like the 1800s. Okay, so let's just effectively call it, it's not money. It's an industrial metal. It is, I would consider it a precious metal, and it's extremely rare. So I see what you're talking about, and I'm literally betting on it. Okay, so if it gets to parity, if it gets right here, if it gets to 1-to-1, I'm going to trade half my position because I bought it down here, right? I'm going to trade half my position for gold. And then if platinum gets to 1.5 times the dollar value of gold, then I'll trade the next 30%. And if it ever gets up to 2x to gold, then I'm going to trade the remaining 20%. So the idea is to basically trade an industrial metal for real money. It's just kind of a game I like to do, and one that I'm literally betting on. I literally traded some silver for platinum back when the ratio, I think it was a kilo of silver got 1 ounce of platinum. So I did a bunch of that. But yeah, I think platinum could do really well. I think it's relatively cheap. Now, when this reverses and when does platinum and palladium take off, I interviewed Ed Stirk. You might want to have him on your show. He works for the World Platinum Investment Council, and he studies platinum and palladium. That's his full-time job. Probably one of the world's leading experts, and he basically forecasts that both platinum and palladium are in a deficit right now, but he expects palladium to be in a surplus here in the next year or so. So that's not as a bullish case. However, platinum has been in a deficit now for a few years, meaning that we're consuming more platinum every year, through industry, and we're mining less and less of it. So basically what has to happen is the price has to get to a point to incentivize these miners to start pulling more of this stuff out of the ground so that we can, get rid of that deficit. But he doesn't anticipate that deficit is going to be solved until at least 2029. So I think the case for platinum is more bullish than for palladium, and I'm just going off of what he says, so I'm betting accordingly.
Yeah, I know that platinum and palladium are really important for catalytic converters and gas cars. Do you think because there's the rise of electric vehicles, do you think that's messing up with industrial applications of platinum?
No, I interviewed another expert, Elliot Gue, and he basically brought up a chart of, was it Switzerland or I think it was Finland. And that country has, don't quote me on the country, but he basically said that they went to all electric vehicles. And their gasoline and petroleum consumption had basically stayed the same. It was because people are still driving cars that, are 30 or 40 years old, so I think that when we look at the electric vehicle narrative, we have to look at it from a first world perspective, and especially we're in California, and so we're kind of inundated with it. But the reality is that most of the planet is, they're third world. Most of the planet doesn't have, reliable electricity, okay? And so there is no way that Africa as a continent is going to take on electric vehicles. It's just not going to happen. There's no way that most of Asia is going to take on electric vehicles. It's just not going to happen. They don't have the infrastructure in place to charge these things and do it. So unless there is a surprise demand for more pollution and smog, I don't think it's going to affect it very much. And on top of that, it looks like the electric vehicle narrative isn't taking off quite like we've been sold. It looks like the plug-in hybrids are going to be the first world wave of the future, and those still take catalytic converters.
Yeah, that makes sense. So, what would signal the game over for paper silver?
The game over for paper silver. Well, I would say if for some reason they needed the delivery and and they weren't able to get it, that could probably be game over for paper silver. I don't know. I'm not sure. I asked Vince Lancy about this the other day, and he kind of thought that what basically would happen is like JP Morgan, who's a custodian of a lot of this stuff, what he thought they would do is they would go out to these mines because silver is kind of a byproduct of a lot of like zinc and other base metals. He thought that they would go after their byproduct first and basically just buy it up to be able to keep it. So I'm not really sure what would be game over for that. I think the game for us basically is to just stack, invest in it as long as the thesis is still on. I wouldn't be too concerned with like whether the paper game is going to be over or not. As far as like buying stuff on the stock market for it, I would not buy SLV because if you wanted to redeem that, you can't. I would buy things like PSLV, which is Sprott's physical silver trust. And I don't think anyone watching here is going to do it, but if you wanted to redeem that, you could in 1,000-ounce bars. Now, I don't know what you're going to do with a 1,000-ounce bar of silver, but my point is that is actually redeemable, and that is a place that you could do it. So I would avoid the funds where it's not redeemable. You're simply you're gambling on a paper price. One day that game may end. I don't know. But if it does, I think you'd be glad to have the other one, the one that it is redeemable.
Yeah, I think redeemable is definitely the way to go because if you can't get your silver and say the electricity doesn't work anymore, there's some major thing that happens, then you're basically out all your money. So, how would you allocate between gold, silver, and miners today?
You mean like a percentage allocation or?
Yeah.
Okay, I think that's going to be different for everyone. I would say if you're younger, you probably want less. If you're older, you probably want more. I look at them as different. I look at the physical gold and silver as basically insurance, wealth preservation. It's something that you can hand down to your children. It's generational. So I would look at that as that way. Another one, I just asked Vince about this the other day, and I guess I've asked a lot of my guests, just like you are now, of that because I was curious of it. And I've gotten dozens of different answers. So I would say, generally speaking, you start with the metal first. After that, then I would buy what we call paper gold and silver on the stock market, like PSLV or PHYS or CEF, one of those. I sound like a spokesman for Sprott right now, but I like those ones because they're actually redeemable. Okay. Then after that, then I would go and probably something simple like GDX or GDXJ. It's a basket of gold miners and a basket of junior miners. You could do SILJ. As far as a percentage, though, I think you kind of have to look at your own life and look how stable and safe you feel. For example, do you own your home? And if you do, I think you need less gold than if you don't own your home. That should be like your first priority is get your home base, get your castle, get your residence established. And, I don't think you should be stacking a bunch of gold and silver, if you don't have a residence. You know what I'm saying? Like, I think you should spend it on that. Then once you have that established, I think you should, I guess it just depends. For me personally, I've got about probably 15% between physical vaulted, outside of my house and on the stock market.
Mm.
So like my portfolio right now, the model portfolio, I think is almost 30% gold and silver and gold and silver miners. So I'm very confident that the government is not going to balance the budget, and I'm very confident that they're going to continue to print. And so I think that part of the portfolio is going to be amazing. But it's different for everyone. I would say if you're younger, you probably want a little less and focus on getting your home base established. And if you're a little older, it's probably more inclined to be stacking and wealth preservation and safety and passing it on to the next generation.
Yeah, it definitely makes sense. We're definitely being inflated away with our currency. So, what's your price target for silver over the next 3 to 5 years?
Okay, I think of it a little bit more as far as recognizing when we need to be out. Okay, so I suppose I might think of it a little bit more in ratios. Okay, so let's see. The question was on silver, like how high could this actually go? I mean, if you look at past bull runs, you've had 10x runs. Could we go 10x from here? I don't think so, but I think we could go 10x from down here, kind of like in the last basing cycle right down here when it was in the low 20s. So I don't think $200 is out of the range at all. As far as like a specific price target, that is so difficult because we just don't know how much they're going to print. We don't know how much people are going to wake up and respond to this. We just have no idea. I guess I'm looking at it. What I have in my thesis of when I'm going to be selling is there's going to be some indicators. Some of them will be I'll regularly start seeing advertisements on the news and on the TV to buy gold, right? I will see kiosks in the mall selling gold. Okay, I haven't seen that yet. All right, I saw my first commercial for gold yesterday, and I was telling my buddy, I'm like, should we be nervous? Right? When I see lines around the block at coin shops to buy gold and silver, right? Those are going to be my indicators. Another thing that'll be my indicator is the ratio. So this is the gold to silver ratio. And we can see at the height of markets here, like down here at the top of 2011, the ratio got all the way down here to 30-1. So it took, 30 ounces of silver to get 1 ounce of gold. We're way up here. Today we're at 81 or 82. Like we're not even close. I need this ratio to get down at least to 40. And then I'll start entertaining the thought of like, okay, it's time to let this go. Because for whatever reason, towards the end of a precious metals bull market, that ratio gets low. And I'm guessing, but I think what it has to do with is eventually people wake up what's happening to their currency and they go, wow, 1 ounce of gold is $10,000, but I could get 40 ounces of silver for $10,000. Well, that's a deal, right? And so that's when they move into it, and that's the last blow off top, and that's when you want to be out. So that's my opinion. Is I don't specifically have a price. I'm more so looking for those indicators that I said, and when they start happening, I'm not afraid to press the sell button. I'm not going to be selling my physical stuff, I don't think, unless I'm able to trade it for land and houses. But yeah, that'll be my indicator.
Yeah, it makes sense. You got to look out for those indicators. So, through everything you're seeing, are you bullish on uranium?
Yeah, I've been in uranium now for quite a while. I got in back when it was around. This is the spot price of uranium here. So just to heads up, this goes back to 2007. Then Fukushima happened in Japan, and all of those reactors came offline. So there was, I believe, 50 of them, and they're bringing like 36 of them back online now. But anyways, they shut down. So that just drastically just killed the bull market in uranium. Okay. And since then, we've had a nice little rise here. So I was fortunate enough to get in around 45 or 50 bucks a pound. We had the blow off top up here up to $108 a pound, which was amazing. So we got out of uranium there and then started nibbling back in here. So here's the Sprott Physical Uranium Trust. Basically, green arrows are entry points and red arrows are exits. And yeah, just started buying this stuff way down here, sold it up here, started buying in again down here. It's now 4% of the model portfolio. We're actually getting pretty close, possibly a buy today. Yeah, this looks like a great buy today. Look how it came right back down here, touched on the 200-day moving average today and then shot up. This is a very bullish candle right here, very bullish bar, showing that it's extremely likely that the price is going to be moving up later on today and probably into next week. When you get candles like that, that's where you need to be putting green arrows. Those are good times to buy. Fundamentally, the argument with this is basically, as a planet, our nuclear reactors are consuming about 200 million pounds of uranium per year, but we're only mining 170 million pounds. So there's about a 30 million pound deficit every year. So why do we all still have electricity, and how come these things haven't shut off? Well, they each have anywhere between 2 and 3 years worth of supply kind of in the back end, ready to go so that they don't have to turn these things off. Does that make sense? Yeah. So, there is going to be a lag on this, but the beauty of this, especially with this fund, is this fund only came out a few years ago. When was it? Back in 21, so 4 years ago. And what this fund is doing is they're purchasing physical uranium, and they have it written in their prospectus that they cannot sell it to utilities. So this company has taken, this fund has taken, I think the last count was 74 million pounds of uranium off the table. So in other words, they have almost half a year's supply of uranium that Constellation and Duke Energy cannot have. It's just sitting in a warehouse, and you can buy into it. You can literally buy physical uranium. So I like this a lot as the bet, is every pound that we buy, it's not going away. It's sitting in the warehouse, and you're shrinking the global supply, creating a squeeze. Does that make sense? The squeeze is going to happen whether these guys do this or not. This is simply accelerating it, right? And you can make money off it, okay? The next one after that I like a lot, oh, wow, we got to buy today as well. Okay, so this one is URNM. This is a uranium ETF. The top 3 holdings are Cameco, Kazatomprom, and then this other fund right here, the Sprott Physical Uranium Trust, the one that we just saw. And that makes up about half the fund. And then the rest of the fund is a whole bunch of little junior miners and other companies. But I like this one for your everyday average investor. Like if I could only buy one, it would be this one right here. And ironically, today is a good entry point. I need to put out an alert as soon as we get off here to my subscribers that, this is the day to buy. Look at that candle right there. That looks perfect. I like it. I like it a lot.
Yeah, so is there any uranium mining companies that pay dividends that you like?
That pay dividends. Well, Cameco pays a tiny dividend the last time I checked. But no, I don't think there's really any that pay a dividend. I mean, BHP has some uranium assets, and they pay a nice dividend, but they're not really a uranium miner. I mean, they kind of just sell their stuff into the spot market, and then they're done with it. So no, not really. I mean, I like Cameco. I like Cameco a lot. This fund is like 15% of Cameco, so I own quite a bit of Cameco. But yeah, I don't think. No, not really.
Okay, well, that's good to know. I just like stocks that pay dividends myself because then you don't have to sell them. You can just keep holding on to them and getting that dividend back. So it definitely does seem, though, like uranium's a good buy, and that is a very important asset. So switching gears a little bit, we saw that Bitcoin has lost almost 20% of its value in the last month. Do you see this as a decline, as part of a cycle, or part of its demise?
I think eventually Bitcoin is probably going to go to zero. As far as it's interesting because this is kind of playing like a risk on asset. In other words, like when the stock market and tech stocks are generally doing good, Bitcoin's generally doing good. And when they're not doing well, which right now they're not, then Bitcoin is not doing well. So I was hoping that Bitcoin would become more of a store of value, and it I don't know that it is anymore. As far as what I see initially on the charts right here, I see quite a bit of support, kind of where we are now, around 85,000. And then the next level of support I see here on the charts is going to be right around where this white line is right here, just somewhere around 75,000. So I think we're probably going to drop down to 75,000 here in, short order in the next few weeks or so. I mean, it could have, this is so volatile, it could happen tomorrow. But that would be the next level of support that I would be looking for Bitcoin. I don't invest it. Well, that's not true. I bought a Bitcoin when it was 450 bucks, and then I just never did it again. And the whole reason I did it was because I used to be a poker player, and I could put money onto these poker sites without Uncle Sam taxing me. Because they didn't care about Bitcoin back then. So it was awesome. But since then, the government has stepped in and, they started taxing it and keeping track of it and all that. And so my whole reason for holding this thing has completely gone away. You know what I mean? I held it because it was digital cash that I wasn't taxed on. And now they're talking about some strategic Bitcoin fund or something. I'm like, a strategic like the strategic petroleum reserve is for like emergencies, and in case we go to war, we can actually power our tanks. Like, what is the strategic purpose of a Bitcoin fund? That makes no sense to me. I think what they're doing is they are trying to create some kind of demand for treasuries because the rest of the world has slowly been not buying our debt. So now we're having to force our own people to do it. And if what they can do is they can go to sites like Coinbase and they can say, hey, any cash that comes in here, you're going to store them into treasuries instead of just keeping it as cash. That will create this artificial demand for US bonds and debt. And so I think that's why they're doing it. Anyways, that's the game, and I just don't really want to be a part of it. But as far as looking at the charts, we might get a little bounce today, but this is the level I'm eyeing right here is 75K. If I was a trader, I might, and I am, but I'm just not going to trade Bitcoin. I would be looking at it right there. After that, there is some level here, basically this upward channel right here, this parallel channel. By the time it got down to there, it could be around 60,000 or so. But yeah, I expect this, I think we're in a bubble. I think tech stocks are in a bubble. I think Bitcoin's going to follow that. And I think that it's more likely than not, we're going to have a pretty good washout here in Bitcoin. I think it's going far lower.
Yeah, I definitely think you're right. It's definitely not backed by anything but fiat, so it's definitely not a good asset in my opinion. So what global event is being ignored but could change everything?
Oh, well, CBDCs. I don't think your average person really understands what's happening there. Central banks, digital currencies, so basically digital money. Most of us all have digital money right now. When you look at your bank account, it's just got a bunch of digits on there, and they don't actually have paper dollars sitting in the bank to back that up. It's just digits on the screen. So I think people are already kind of used to it. But they don't really understand that if you get rid of the paper currency, that they can now, and by I mean our big thinkers, like Trump or Carney, could control it, just like they did with the Canadians when they had that truckers protest, and they said, hey, we think this is stupid what's going on right now, so we're just going to sit at the border and not, we're going to protest. And well, they shut down their bank accounts, and they can do that with a digital currency. They're already experimenting with it right now in China. And so those poor people don't have real control over their money unless they buy physical precious metals. So I think that's probably a big threat. I also think that inflation is a pretty big threat that most people, they know it's here, they know it's happening, they don't really understand why. I think that inflation is going to be pretty radical here over the next, 5 years, maybe longer. And I don't think people are really, paying attention to that. I did a presentation for a group of friends about 3 years ago when gold was at, it hit the triple bottom at around 1600. It was 1615. And I did a presentation. It was about half an hour. There's 20 of them there, giving the history of money, and why I thought that gold was a good bet right now. And out of the 20 guys that watched that, only one of them bought.
Hmm.
And to my knowledge, the other 19 still haven't. So they don't really get what's going on, even though I thought it was a darn good presentation. And the guy that did bought, like, he was all in. He was like, oh my God, now I understand. This makes sense now. I went through Bretton Woods, all that, what they've done with the currencies, everything, the story every libertarian knows, right?
Yeah.
And but no one really acted on it, and unfortunately, I think what's going to happen is it's going to take gold going to 10,000, and then they're finally going to wake up, and then that's going to be the top when they should have been buying it a few years ago. So central bank
Yeah.
digital currencies and inflation, I think those are probably the ones that people aren't paying enough attention to.
I definitely agree with you. I don't think people look at the hidden tax of inflation. They're worried about all the other taxes, but they're not worried about their own currency being basically taxed away through inflation. So, getting into some geopolitical things that's happening with America right now, what is your assessment of the escalating conflict involving OPEC member Venezuela, particularly given the strategic interests of Russia, China, and Iran?
I'm not sure about the Russia, China, but if you're talking about all the ships that we have, meaning the U.S. has outside of Venezuela, I think that's pretty interesting. Certainly not for the people of Venezuela. I've talked to people that are from there, and it just sounds. What happens when you get a banana republic that just starts to give currency out to all of its constituents for anything? I mean, I remember a couple of years ago, I was talking to a guy at a poker table who had come from Venezuela, and he was able to get out. And he said that they were paying people to not work when they were pregnant. They were paying people not to work, just because. He said the government, everyone was getting UBI, Universal Basic Income, for something, and they were just printing it into existence to do it. And so basically what's happened is that country is one of the biggest oil reserves on the planet, and they're not pumping any oil out of it. Okay, so this could be an amazing setup here, where that sour crude that's sitting underneath there could go to refiners right across the pond into the U.S. and feed the global market, but it's not doing it because their politics are so screwed up. So if I had to guess, I think what's going to happen is I think that we're probably going to take control of that, get it in order, probably start to, put someone in power that will allow us to drill that out and get it into the market. I don't think that's anything new. If you look back over the history of the United States, we've been around now for almost 250 years, and I think we've only not been at war something like, I don't know, 18 or 19 years. Maybe someone in the comments Google that for me and make sure I'm not crazy and put it in the comments so we can all learn from it. But yeah, it is very normal for the U.S. to be at war, and it's extremely rare when we're not. And so I think that's what's going to happen. I think there's too big of an oil reserve there for it not to be claimed, and simply because of our geographic location to it and our ability to refine and process that oil, I think we'll win.
Yeah, I definitely think it wouldn't be. I don't know. I think a lot of Venezuelans actually want the United States to come in at this point and fix the economy, but there's some that don't also. So we're going to see how long a war with Venezuela would actually take if there's a big conflict. So, getting back to where to start, according to the Wall Street Journal, costs for goods and services are up 25% since 2020. What would be the top three things people should be doing today to protect themselves in this environment?
Only 25%. I think that's undershot. I would say first and foremost, you want a home base. You want a home that you own, and if you're not buying it with cash, then I would do it with at least in the U.S. we have the advantage of a 30-year fixed mortgage. Even at current rates, I think that is a lot less than inflation. So, even if you got to get a mortgage at 6.5 or 7 or whatever it is right now, I think that's less than inflation. So the asset here is actually the debt, which sounds odd, but because the debt is fixed and it's not it's fixed at, we'll just call it 7%, but inflation's at 10, 15, you're actually making money on that, although it sounds odd. So I would say start with that. I would also say stack physical precious metals somewhere, vaulted service outside of your home. And then I would invest in good companies, in underpriced, undervalued assets, and trim off the stuff that's done really well, like tech stocks. If any of you guys are in tech stocks, man, now is an amazing time to sell. You've had a heck of a run, rinse and repeat and do the same thing with right now. I like platinum a lot. I like oil stocks. I like oil and gas. I like palladium for a short term. I like gold. I like silver. I think some of these things, nickel's really cheap. Like we've hit a floor in nickel now for the last year. I think that's going to turn around. Copper, the world is electrifying at a rapid pace, and we don't have the base metals to keep up with it. So I would do it in that order. I would get your castle set. I would stack, and then I would move on to investing in companies that extract those metals and those commodities. And I think you'll do fine. I really do. It may be scary for the vast majority of the public. The kind of inflation that I'm talking about is what they went through in the 1970s. But I think the difference is now is we're not going to have the wages to keep up with that. So they didn't feel it as much back then because their paychecks were increasing all the time. I don't think that's the case now. I think people that aren't invested in these things are going to get smoked, and they're not going to see what happened until after it's too late.
Yeah, so I've been hearing some things. You mentioned the 30-year mortgage and how that's a good strategy. So I've seen the administration has recently been talking about 50-year mortgages, and we actually see Japan already has 100-year mortgages. So what's your thoughts on them making 50-year mortgages?
Well, I guess they're trying to turn the nation into a nation of renters. I guess it's basically a bet of, do you think that inflation will outpace the 50-year? I don't know. It may actually end up being an asset if you do the math on it. And I think the mistake that most people are going to make is they're going to say, okay, I can afford I'm just throwing a number out there, a $5,000 a month mortgage, and I could have got this 3-bedroom, 2-bath house on a 30-year mortgage for $5,000 a month. But now that the 50-year mortgage is available, well, heck, let's get a 5-bedroom, 3-bath one, right? I think that's the mistake they're going to make. If they were to kind of stick to their original plan and get the 50-year one and still stick with the smaller house, that might actually work out. Like maybe I'm wrong on inflation. I think it's going to get tamed somewhere, But if it's not, and this is the beginning of a runaway hyperinflation, the 50-year mortgage might actually be one of the best assets that a guy could get if you're getting in on the ground floor. I don't know. Yeah, I haven't really thought about it enough to I guess formulate an answer.
Yeah, well, what you said definitely makes sense. If inflation is really high, that would be a really good buy for people. But it would be a bad buy if inflation cooled and then the interest rates are still pretty high. So, what pushed you to start in it to win it?
Oh, well, I come from a background of games. So when I was a kid, we grew up playing penny ante poker. Once I turned 18 and I could gamble at the casinos, I started playing blackjack. Then I moved on to Texas Hold'em poker, and so I started up a poker podcast. And that ran for about 10 years or so. And recently, maybe 3 or 4 years ago, I changed my focus from poker to I changed it to stocks. I took a class in options trading and reading stock charts, and I thought, oh my goodness, we could make so much more money playing stocks than I can playing poker, right? So I have a talent for pattern recognition, and whether that's recognizing patterns of stars in the sky or patterns of betting patterns at the poker table, right? Or recognizing patterns in stock charts. And yeah, I'm very good with patterns, and I found a way to make money out of it. And that's basically why I started in it to win it. Is I like playing games. To me, the stock market is a game, and I like interviewing experts in these commodities. and finding out which companies are the best ones to focus on. And then basically I find where to find entrance and exit points on the stock charts.
Yeah, that's definitely great. I would definitely invite everybody to subscribe to his channel, In It to Win It, and follow him on Twitter as well, or X as it's now called. That's a great site to follow him. And please join his newsletter, claim your free and premium newsletter on his website, stevebartonmoney.com. And yeah, all that you said about pattern recognition, I think that's really important. And if you're good at poker, I think you'll be good in the stock market as well, because they have a lot of similarities. I really enjoy playing poker myself. Uh,
Oh,
yeah, it's really fun. So I definitely would like to thank you, Steve, for being on the show and providing all the insight that you did. And would definitely like to have you on the show again.
okay. I'd be honored to come back on. Thank you very much, Alex.
Thank you to everyone who watched this video. Please subscribe to the channel, leave a like on the video, and share this video with all your friends so we can get the word out on all these important topics. Thank you all for watching. Goodbye.